Sitting in on this Friday, and we are talking with David Dietze, Chief Investment Strategist at Dietze Wealth Management Group, who's keeping his eye on a few stocks that maybe don't get the same kind of attention as the Magnificent Seven, but could be magnificent for one's portfolio over the long term. Let's talk about a few different areas, David. Let's start with Hershey. This is obviously a big player in the business of selling candy bars. They have had to keep an eye on the global economy because the price of cocoa has been on an interesting ride as well. But give us a sense on why a company like Hershey stands out in an era dominated by AI.
Yeah, so Hershey and all my picks are here today because they have not gotten the Trump love. They don't have the AI love and actually have fallen since the election, but they're still category leaders in categories which aren't going anywhere. You start with Hershey. Okay, they have the biggest share of the candy market in the largest market in the world, the United States, 35% market share. This was a stock that was at $265 less than 2 years ago. It is now about $151. Well, yeah, cocoa prices are up. I get that. That has impacted the margins. But the fact of the matter is, for every dollar Hershey takes in, they put 14 cents free cash flow right in their pocket. They have now some initiatives with salty snacks. I think there's going to be some nice branding here. But I think the key thing to watch is potentially takeover action. 2016, Mondelez took a run at them. Just last December, Mondelez was rumored to again taking a run at them. The stock spiked to 208. Now it's 151. If Michelle Buck, who we have all the confidence in as the CEO of Hershey, doesn't cut costs, doesn't get that stock up, it's going to fall into the hands of a Mondelez, Nestle, something like that, and that will help shareholders, of course.
All right. Well, M&A is always a consideration for sure. Constellation Brands is a company that has looked at deals in the past. Actually, they had ties to Canada's cannabis industry. This is the maker of well-known beer brands as well, Corona, Modelo. Give us a sense on why that stock makes your list of names for consideration.
Sure. It's the category leader in beer. And of course, people here like the imported beers, particularly the Mexican ones. They are behind Corona. They are behind Modelo. They have one of the best marketing operations going. But what we're seeing here is a combination of fears. One, of course, is health scares. Will alcoholic drinking cause us cancer? We may have to drink to try and get rid of that. Second, of course, is there is a little shift to cannabis, but as you pointed out, they do have a stake in those operations. I think the key thing here is people are scared to death. There's going to be a 25% tariff on anything coming in from Mexico, which is a big source for their products. We have seen so far that Mr. Trump's bark has been worse than his bite. Ultimately, I don't think you're going to see 25% long term. And I think the bad news is already reflected in Constellation. Any relaxation on the import attack on Mexico, we'll see a higher price in a category leader.
Okay, and before we let you go, in the energy space, we have been hearing about drill, baby, drill all week. President Trump, obviously very interested in seeing a lot of action out of the sector. It could be a little complicated in the short term, only because the president would also like to see lower oil prices. So that sparked a big debate over the kind of energy companies you might want to own in this environment. But you are looking at ExxonMobil, hardly a quiet company. It's obviously one of the dominant names in energy around the world. How are you thinking about Exxon in this environment?
Yeah, absolutely. Whenever there's uncertainty in an industry, you want to gravitate back to one of the biggest players on the planet. That, of course, would be Exxon, fully integrated, fully global, extremely well managed for the long term. The stock was close to 130. Now it's close to 110. There's about a 15% pullback there. You've got a very nice dividend. You will find, if you look at your charts, when tech underperforms, energy starts to outperform. There's a lot of reasons now. People are concerned about OPEC producing more. The drill, baby, drill will be actually good for the industry because there's going to be less regulatory overhang, but maybe less good to the extent energy prices come down. I think amid all this uncertainty, I want something that is the Rock of Gibraltar in the industry, which is not going away. Certainly, the whole fossil fuel area has gotten a big boost from Trump's election versus renewable. And Exxon is my pick here in a potentially uncertain market going forward.
David, appreciate your time as always. Have yourself a great weekend. Thanks for stopping by.
Thanks, John.